Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we're going to be continuing along with our crypto or Bitcoin mining theme. Today we're discussing BitDigital. This is a company based in New York. They have operations in Canada and the United States and a diversified business model that really sets them apart from some of the other miners we've covered on the channel. Now before we get into all that, please take a second, hit the like button, you guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let me know in the comment section below if you're currently holding shares of BitDigital, how you think their business model stacks up to some of the other miners, and what your price target is for the back half of 2023. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we're going to be taking a look at BitDigital Incorporated. Trades under the ticker symbol BTBT on the NASDAQ exchange in the United States. This is as of close on April 28th, just shy of $2 US. They were up 7 cents on the day, or about 3.5% to end out the week. Now BitDigital is one I've seen in a lot of comments on my recent videos. Mid-size producer in terms of the Bitcoin that they're mining each and every month. Market cap sub $200 million. So I'm really excited to talk about this one and walk you guys through some of the investment thesis associated with BitDigital. So if we now move over to the BitDigital website, I'll leave this linked in the video description below. We can dive under the hood a little bit and talk about what this company is all about, specifically some of the differences from BitDigital compared to the others we talk about on the channel. So you can see that keyword sustainable power, leading blockchains on the front and center page of the corporate website. BitDigital is a sustainably focused generator of digital assets with large-scale global mining operations, representing a currently owned maximum hash rate of about 2.7 exahash per second. So really a mid-tier miner in terms of their overall capacity. And a couple of key differentiators. Number one being they're not vertically integrated, so they really lease out a lot of these sites from other companies. And secondly, they're involved in Ethereum transactions as well to diversify their revenue. So we're going to talk about that as we move through the video. If we scroll down, you can see a couple key callouts. So based in New York, as mentioned in the intro, they've got a significant mining fleet in both United States and Canada. So they do have operations in Canada as well. Now, sustainability really seems to be the buzzword in this industry right now. And BitDigital is no different. So they're currently sourcing about 80 to 90% of their power supply from carbon-free power. The next point here talks about their capital efficient structure of the organization. So this is what I referenced. They use these strategic partnerships with specialized hosting center operators to keep their infrastructure costs low. Now the problem with this, unlike what we see with a lot of the other miners, is they don't actually own their physical sites or the means of power production, so they are at the mercy of these hosting operators. They're well positioned for growth, so similar to some of the other companies, they're expanding aggressively. We're going to talk about that growth a little bit later in the presentation. They've got a veteran leadership team with long history in the finance, technology, and crypto industries. And then finally, that Ethereum staking, which allows them to bring in diversified revenue by really supporting or powering the Ethereum blockchain, as we're going to see in the investor presentation next up in the video. So if we now jump into the investor deck, you can see BitDigital, again, BTBT on the NASDAQ, has a couple of key points they bring up here. So number one is their large scale operations. They've got just shy of 40,000 specialized mining rigs, again, in the United States, representing 4 different states and one location in Eastern Canada. The capital efficient structure, which we just talked about, their positioning for growth moving forward, the sustainability aspect, and that experienced veteran team. Now what that means in terms of the numbers, again, 2.7 exahash per second within their own fleet, 79% carbon-free footprint as of Q3 of 2022. So these numbers are a little bit outdated, but we're going to look at a recent press release that updates a lot of these figures towards the end of the video. And through to the end of October of last year, they'd mined just north of 4,500 Bitcoin. That number has now increased to north of 5,000 if you fast forward to 2023. Now, one thing Bit Digital definitely has going for them is their balance sheet. So they've got about $70 million of total liquidity, roughly half in cash and half in digital assets, meaning they're fully funded for years and years of their operations moving forward. They have zero leverage, zero miner purchase obligations. We're going to look at that in a couple of seconds here, and zero infrastructure capex funding commitments as they don't physically own these sites. Now, based on that balance sheet, you can see they've got 5+ years of liquidity. They're currently burning about $1 million a month in terms of their cash burn rate. So with $68 million in the bank, that effectively means that they could fund their operations for 68 months without changing that monthly burn rate. Now, the next slide here talks about the growth prospects of Bit Digital. So they are targeting about 6.1 exahash on a pro forma basis, representing just north of 105 megawatts of capacity, really leveraging or powered by their Bitmain S19J Pro miners, which we've talked about in previous videos. So with that being said, I wanted to pause for a second. As mentioned, the numbers we just talked about were slightly outdated. So if we go into the updated press release, which came out on April 27th, this talks about the fiscal year-end results and Q4 from Bit Digital. You can see total revenue was $32.3 million for the fiscal year. There's some operational highlights in here as well. You can see they generated about 300 Ethereum during the year from mining activities. Now they've suspended their Ethereum mining as the Ethereum blockchain switched from proof of work to proof of stake. We talked about that in relation to Hut 8 mining as well. They cite that about 85% of their fleet's run rate electricity came from carbon-free sources, which is great to see. But most importantly, if you go into the subsequent events here, they start to talk about some of their strategic priorities for fiscal 2023, really broken down into 5 categories. So maintaining that best-in-class balance sheet, which we just talked about, strategically deploying their capital as part of that growth initiative. So Bit Digital is targeting doubling their operating fleet to approximately 2.6 exahash per second within 2023. The third point talks about Bit Digital's expansion into the staking realm. So they're looking to stake approximately half of their digital assets to generate some yield or income on that reserve. Fourth point talks about treasury management solutions and really preventing any downside risk. And the fifth point here talks about that continued focus on sustainability and the fact that Bit Digital's goal is to become entirely carbon-free in terms of their mining operations. Now, another point I found super interesting here, really comparing and contrasting that vertically integrated strategy, is in the management commentary section. You can see they specifically call out the average electricity cost in Q4 being in the neighborhood of approximately 5 cents per kilowatt hour. Now, some of the other companies we've had on the channel are in the neighborhood of about 1.5 to 2 cents per kilowatt hour. And that's because in many situations, those companies are fully vertically integrated. They own their power production and the sites in which they operate. So they're actually able to source power at a fraction of the cost that you see from Bit Digital. So although Bit Digital may not have that big capex exposure or expenditures required to maintain, support, and keep these facilities secure, they definitely do pay the price for that in terms of their variable costs, in this case power, to run and support their mining fleet. And you can see they specifically call out the fact that they encountered certain operational challenges with some of their hosting partners during 2022, and these experiences have now fortified their belief that they need a well-diversified hosting portfolio, which should in theory help mitigate site-specific and regulatory risks. Now, the problem with that is they have to have multiple different relationships with multiple different hosting providers. So although Bit Digital can claim this infrastructure light business model or strategy, there definitely are some drawbacks. And in my personal opinion, I much favor the vertically integrated companies that own their own means of production. Now, if we jump back into the investor presentation, the next section of this company I wanted to talk about is their Ethereum staking, because this is truly a differentiator for Bit Digital. You can see they've now expanded into validating transactions on the Ethereum blockchain. They're also accumulating yields from staking their Ethereum, so multiple different revenue streams here. This is going to provide new, predictable, and recurring streams of digital assets or revenue for the organization. It diversifies them into another blue chip digital asset category, which is Ethereum. and gives them the experience and know-how to potentially try and power or support other leading proof-of-stake blockchains down the road. And we really talked about this big transformation a while ago on the channel, moving from proof of work on the Ethereum network to proof of stake. And as a result of this staking activity, companies or individuals are able to receive an annual percentage rate in the neighborhood of about 7.8% for the Ethereum that they're actually staking. So definitely a big improvement from having your crypto assets sitting in storage or cold storage where they're earning nothing. Instead, Bit Digital is looking to deploy a portion of that reserve and earn a handsome annual return for doing so. And another major benefit for the entire network moving from proof of work to proof of stake is the massive benefits in terms of energy consumption, with an estimated 99.95% less energy being consumed than was in the old proof of work model. And they then specifically call out 5 key benefits of this Ethereum staking activity. So number one, early entrant with permanent protected market share. So again, one of the first crypto miners that's moving in a big way into this space. Revenue diversification, which we just talked about. APR, or annual percentage rate earnings on an asset that's deflationary in nature because they continue to produce more Ethereum. The potential for their Ethereum balance or reserve to compound over time as the rewards are paid out in Ether. And then finally, a NAV appreciation potential, or net asset value appreciation potential, giving Bit Digital exposure to the smart contract economy, which is expected to be a growing driver of Ethereum and Ethereum demand in years to come. Now, switching gears a little bit, I wanted to take a look at their actual mining locations. So again, you can see they operate in 4 states in the US, being Nebraska, Texas, Georgia, and New York. They then have 1 site north of the border here in Canada. And again, they specifically call out they're not focused on the physical infrastructure, the data centers, or the power generation, but instead they're focused on the mining computers and their overall fleet. So Bit Digital actually achieves that by partnering with leading data center operators, allowing them to host their machines at those facilities. Now, interestingly, they then call out the fact that this model gives them negotiating power to ensure the lowest possible operational electricity costs. But as we just saw, their costs are well above some of the other operators who have embraced that vertically integrated strategy. So this one I would definitely challenge, as I feel the vertically integrated model does give operators more control. They've got that distributed footprint across North America, so you are getting that diversification, which Bit Digital themselves said is crucially important to this strategy, so they're not solely reliant or dependent on one hosting partner. And again, the final point up for debate, but Bit Digital feels this strategy allows them to maximize shareholder return on investment or return on equity because they're not requiring the big upfront capital expenditures to get these sites up and operational. Now, the final point I wanted to talk about is in relation to this section here, the zero miner purchase obligations. If we jump to that slide, you can see the procurement advantage of Bit Digital is they have not gone out and placed large-scale orders directly from the manufacturer. We're starting to see big delays there, and unfortunately for a lot of the companies that placed these purchase orders when Bitcoin was in its heyday, they overpaid for these machines, and they're now being forced to cough up the money to support these purchase order agreements. Now, in contrast to that, Bit Digital has gone out to the spot market, it's called, purchasing and picking up units off other miners and really leveraging their network of contacts and partners to source and find additional mining rigs at the best possible cost at that point in time. And this is another topic that we spent some time discussing in our interviews with CleanSpark and TeraWolf, is really the fact that a lot of these companies have significantly overpaid for their hardware or their equipment, and that's now having major impacts on their overall profitability and their return on equity. So with that being said, you guys, Bit Digital is definitely one to keep an eye on. Very different than a lot of the other miners we've covered on the channel in terms of their operations and their strategic approach to this industry. However, with that being said, this is definitely one of the top performing stocks over the last couple of months in terms of their share price, and offers a lot of diversification, both in the form of revenue, company operations or activity, and in terms of the various different locations that Bitfarms currently has under contract. So with that being said, I'd be super interested to hear your thoughts in the comment section below, specifically if you're currently holding shares of Bit Digital and your rationale as to why you prefer this company over some of the other miners. If you're still watching at this point, make sure you hit the like button, you guys. It's a big help to myself and the channel. And if you're not currently subscribed to McNallie Money, feel free to join. We'd love to have you as part of the community. That's all for today. Thanks so much for watching, and we'll see you in the next video.